I'm yet to meet someone who loves paying taxes. Now, I'll meet people who say, hey, I want to make sure that I'm not paying more than I need to, but no one loves paying taxes. So sometimes people will reach out and they'll go, I have a property. I purchased it for $500,000. Now it's worth $1 million. It's kind of a hassle. Tenants aren't always the best. There's tax things, there's property stuff I have to deal with when I'm traveling. Oh my gosh, is the laundry machine not going to work? And that causes anxiety. We call that return on hassle, meaning even if the property has healthy cash flow and is appreciating, does it make sense to actually keep the property? Well, what we're going to be talking about today is how to think through if you want to maybe sell a property or an appreciated asset, when does it make sense? And if we're thinking about taxes specifically, you never want taxes to wag the life dog. So, in the example of someone I spoke to recently who was actually worried about, oh my gosh, if I sell, how much am I going to really take away because the gains would be so massive? They were in a fine spot either way. So it wouldn't have been fun to pay the taxes, but they'd be okay. So I'm going to now read a question from our free community, the Root Collective. And in our new series called Root Drops, you're going to receive a drop of knowledge from one of our amazing lead advisors, Chelsea, in just a second. So check this out. This comes from someone who wanted to provide a anonymous name, SM, and they said the following: rentals to stocks, anyone? Anyone have a strategy to get my assets out of rental property and into stocks without losing 35% to capital gains? It's never black and white. Financial planning is not this simple, but we still want to provide some guidance on it. So, Chelsea, I'll let you take it away.
So let's talk about a strategy that might help reduce your tax bill when selling a rental property, and that's banking investment losses. So if you've owned a rental for a while, you've probably taken depreciation each year, and that's great while you own the property, but when you sell it, it can increase your taxable gain. So this is going to be a little bit complicated, so bear with me as we try to walk through what this might look like. So here's how the IRS looks at that gain. So when you sell, part of that gain is depreciation recapture. And that's the portion that's tied to that depreciation that you claimed along the way. Then the rest is taxed at long-term capital gains rates. And then if your income is high enough, there's this net investment income tax of 3.8% that could apply, and that would be to the full gain. So let's walk through a quick example with some numbers just to kind of illustrate what this might look like. Let's say someone bought a rental property for $500,000, and over the course of 10 years, they claimed $200,000 in depreciation. Now it comes time to sell, they sell for $800,000, and that's a total of a $500,000 gain. Now, let's break that down into these different categories. So, 200,000 is going to be taxed as depreciation recapture, and that's at ordinary income rates up to 25%. Now, the remaining $300,000 is taxed at long-term capital gains rates. And then again, if you're subject to that 3.8% net investment income tax, that would be, on the full $500,000 gain. So let's say this person had $100,000 in investment losses from a taxable brokerage account, also known as a superhero account. And those are losses that they harvested and carried forward. So those losses can be used to offset long-term capital gains. So instead of that $300,000 taxable gain, it's now $200,000. So I know that's a lot of numbers there, but just trying to kind of paint that example of, that could reduce their tax bill depending on their full situation. Now, important reminder here, this is definitely something you want to talk to your CPA about because this is a complex tax strategy and really depends entirely on your specific tax picture. But the bottom line is if you're planning ahead, harvesting investment losses over time could give you more flexibility and potentially lower taxes when it does come time to sell.
Most people think along the way when you're saving and investing, adding money to your 401k, you want to retire early one day, who knows exactly what age, but you're planning on it. There's not a lot of tax strategy you can do. Most people go, okay, I could save to my 401k, get a deduction. Yeah, maybe I could try to optimize if I do 401k or Roth 401k based off my tax bracket, but there's not a whole lot. Now, I know when I retire, I have more customization. Do I pull from my 401k or my IRA or my Roth? And that's all accurate. But what Chelsea just alluded to, which I hope you guys fully just took in, is that along the way, if you have a rental property, you might not want to sell it while you're still working. In the future, you might be hesitant to sell it because you're worried about those gains, but can you bank losses along the way? There's also things like tax loss harvesting that you can do along the way so that when you eventually do decide, oh my gosh, I'm going to sell, there's going to be a big gain. Maybe you've harvested so many losses along the way that there's still a gain, but it might be way less than you were expecting, which might allow you to retire a little earlier, which Chelsea nor I, we're not here to optimize. We're here to say, if we optimize, you can retire a year earlier, have more time with your child. You can spend more time traveling. You can go help a child with a down payment. So this is what we love to do. If you're looking for these types of strategies, this type of guidance, holistic planning that encompasses the tax, the withdrawal, the estate, the insurance, the healthcare, you're in the right spot. I encourage you to go to our website, rootfinancial.com, and in the upper right, you'll see a button, and that button says, see if you're a good fit. Now, if you click on that and you go through those questions and you really resonated with today's episode with Chelsea, you can elect to work directly with Chelsea. Some of you will send me notes. Hey, Ari, I learned something from one of your advisors, not just on the financial side. I can tell they're competent, but I really like them. I think they're going to be the type of person that my spouse would resonate with. Can I work with them? Of course. Go to the website and you can see the steps to begin.